Hi, I'm Bernard Leong, and you may know me as the executive who really wants to buy a property through PropertyGuru. And in my spare time, I really need to know what is happening with the proptech sector and the venture capital side. You're listening to Analyse Asia, the podcast dedicated to dissect the pulse of business, technology, and media in Asia. And today I have Steve Melhuish, co-founder of PropertyGuru and venture partner in Wavemaker VC. He's a guest that I've been wanting to get on the show. So Steve, many thanks for coming on the show.
Great to see you, Ben.
Yes, and you probably have very interesting experience as a startup founder and now moving into the venture capital business. So before we get onto all the interesting stories of PropertyGuru and Wavemaker Venture Capital, can you talk a little bit about how did you start your career?
Sure. So my background is, my father was in the army, so we moved around every 2 years, and so new home, new school, new friends every couple of years. And as a result of that, I kind of got a bug for moving around. But I was always quite curious around technology when I was a kid, and so I taught myself coding. I was the only kid in the school I went to do computer science, and I managed to find a teacher who would help me do that and get me through to get the grades in that. And then went on to do communications engineering, because in those days, which is showing my age now, late 80s into early 90s, telecommunications was starting to liberalise and starting to become a little bit more popular. And was kind of the precursor to the whole internet boom and kind of the driver behind the internet boom. So I did communications engineering course, and I joined a number 2 telecoms company in those days in the UK, which was fighting the incumbent. And it was highly innovative, and I learned a lot with that company in terms of innovation and what they were doing in terms of branding and trying to compete with a monopoly. And I absolutely loved that. It was really, really exciting times, because the telecommunications markets around the world were starting to liberalise. Regulations were going from fairly black and white to grey to become a little bit clearer as the markets liberalised. And I saw that, and I was able to participate in that, both in the UK and also then Europe, and then also then on a more global basis. And that was just really, really fascinating, seeing the dot-com boom take place, dot-com crash take place, and then it's a relationship between the internet and also telecommunications, which then kind of suffered as well. So I spent the first 10 years of my career in telecoms, and then I spent the last 15 years doing more entrepreneurial stuff. And I kind of got the bug a little bit from the telecoms days, when all the things I was doing it was pioneering, it was new markets liberalising, it was new businesses being created, and I was kind of in this ambiguous parts of the business, creating things from nothing, albeit within a large organisation. I then took that out, and when I left telecommunications, I spent some time building my own business, which was helping other companies to launch internet services and mobile services, and also working with an investment bank in London, which was helping digital media companies to grow and raise money, including a small company in those days called Skype, when it was 10 people in a small shop house, effectively a shop house in Soho in London, and who wanted the telecommunications experience. And it was really interesting and fascinating insight for me, and I kind of got the digital media startup bug from that as well, and seeing hundreds of business plans, meeting a whole bunch of founders and VCs, and helping some of these companies to raise funding and help them grow. And then as a result of a 6-month stint traveling around Asia with my girlfriend in between the telecoms job and other things, really, really getting the bug for Asia. So I had a post-it note on my wall which had Digital Media Asia Startup, and so that kind of focused where I wanted to be. And I was then looking at roles for startups and VCs in Shanghai, going back and forth from London. And then my wife's company had a reorganisation, offered a role in Singapore. We went, shit, Singapore. It's boring. Why do you want to go to Singapore when I really want to be in real Asia, which in those days, in the early 2000s was China. And but we said it's going to be a lot easier to go from Singapore to China. And then 15 years later, I'm still sitting in Singapore once the roots start taking shape. And so in between a little bit of angel investing, including in Singapore, made a couple of investments in Singapore, one of which I was asked to come along and help, and then run, which is a mobile content company, in 2006, and then end of 2007 started PropertyGuru, and then that kind of consumed about 9 years of my life, or 10 years of my life. And I guess more recently been doing other things, including again, spending more time with angel investing, supporting startups, and also Wavemaker.
So, in your career journey, given that you have such a wealth of experience from the telco side, the startup and angel investing side, and then of course building your own company.
Yeah.
What are the interesting lessons you can share with my audience? Life lessons.
Life lessons. A couple of things, I guess. Well, a few things. So one is, I think, timing. The importance of timing. So if I reflect a little bit back to my telecoms days, the company I was working for, it got acquired by a company called Cable Wireless. It went through a period where it was trying to benefit from the whole internet boom, and had this fantastic vision and strategy which was called PI. People, information, entertainment in the palm of your hand. And the vision was everyone would have this magic device in this palm of their hand which should connect to these things called ASP, which we now call cloud, and it will all connect nicely together and you'll be able to control the whole of your life through this thing. Fantastic vision, and it made a big pivot. It sold, I think, about $15 billion worth of assets like Hong Kong Telecom, Optus to Singtel, and had a Singtel stake, disposed of all these assets, and then bought a whole bunch of internet assets, about 24 internet assets, and then wrote most of those off later on, but including MCI WorldCom's internet backbone, some good stuff as well. But the thing was, fantastic vision, just way too early. It's like 10, 12 years too early. And so if you then had that vision 10, 12 years later, it would have been a fantastic thing to do, but it's just way too early. And I reflect that to more recently with the PropertyGuru experience. One of the reasons why I believe PropertyGuru has been successful is because the timing was right. Now, did we know at the time that timing was right? No, but there were signs, right? So we knew that population was growing, we knew that middle class was growing, we knew that there was obsession and heavy investment taking place in property, and as a number one asset class that was going to continue, particularly in Asia, in terms of home ownership and also investing in real estate. But at the same time, online adoption, at least in Singapore, surprisingly was quite low in 2007. The infrastructure was very good, broadband penetration was very high, but people were not using the internet in those days. But you had internet banking starting, DBS launched internet banking, you had AirAsia doing low-cost airlines, you're booking with a credit card, using the website, you had people, e-commerce in those days with a company called eBay, which most people wouldn't have heard of now, but importing handbags and shoes from eBay into Singapore. So you had early signs of this. And so in hindsight, you realise that actually the timing was right. So timing was a big thing. Related to timing, I think, is this whole thing around, is it disruption, revolution taking place or evolution taking place? And I've come to the conclusion, through both the telecoms experience and also through startup experience, that things just take longer than you expect, right? So everyone expected, this pie thing to take place. It took 12 years before it would have really taken shape. Everyone says, we thought the same in PropertyGuru when we're expanding to new markets. We have to rush to new markets because if we don't, we'll miss the opportunity. But in reality, things just take a little bit longer. It takes longer to build the business, it takes longer to get the scale, it takes longer to build the brand. And, things that look like an overnight success have actually really taken 10 or 15 years or 20 years before they've got there. And you see that with Amazon, you see it with Alibaba and Tencent. They've been around for 20 years. But everyone's talking about fairly recent phenomena, but it's actually 20 years in the making.
So other than timing, any other things that you think might be also important as a set of life lessons for my audience?
Life lessons. I think in terms of life lessons, I think the other thing that I would call out would be, if I look back at one of the most important times and milestones for me in my, career or life in the last sort of 20 plus years, it's been around, I deliberated for many, many weeks and months about whether to take a break. Or do I go from this one, career to the next career to the next career? And I then decided that actually, I was going to take 6 months out. And I really stressed about it at the time. I remember it quite clearly, thinking, 6 months is such a long time, right? You're going to take 6 months out and just go on holiday for 6 months, right? And I thought, okay, I'm really brave, right? I'm getting a 6 month break with my then girlfriend, now wife. And actually, when we were travelling around Southeast Asia, it was like 4 weeks in Cambodia, 5 weeks in Cambodia, and then 5 weeks in Myanmar. And it felt like we were, being quite brave and big, but actually we were meeting people who had been travelling for 2 years or 3 years. And the overall scheme of things, at 6 months or 1 year or 2 years out of the whole of your life, is nothing. It's a drop in the ocean. And so, and I learned an enormous amount about myself, but also in terms of, it led me on the journey to be here, ultimately, and things that are important to me now have been shaped by that one experience. So if I hadn't taken that time out, I wouldn't have got that perspective and clarity about what I wanted to do. So another life that I would encourage at some stage you're going to have to take time out, and the bulk of time out, not a week or a few days in between breaks, but a proper break.
Okay, so the main subject of the day, we want to talk about two things. I think the first, I want to talk about PropertyGuru today. I think is probably the leading real estate platform in Southeast Asia, and originally started in Singapore, and you have been the co-founder and the CEO formerly. I think now you have transferred it to Hari.
That's right.
And so I want to actually dive deeper back in the entrepreneurial journey part before you transition to your current role. Can you talk about the backstory when you founded PropertyGuru? Because I know it's an interesting story regarding golf courses were also involved, right?
Golf course? Is that
you were supposed to do something else.
I've forgotten about that. You're right. Actually, where did you dig that up from? Okay. Yeah. I did actually I spent some time looking at the opportunity for indoor golf courses. And I had no interest in golf necessarily, but it looked like an interesting opportunity. But there's a whole other story around that, which I can share another time if you're interested. But anyway, I decided not to do that. And I was running this mobile content company, and in 2007, the whole property market exploded, and the population went from, it was growing at 1% or so. I think it started growing at 7%, and over a relatively short space of time went from 4.4 to 5.4 million, so an extra 1 million people into the country. So put a lot of pressure on housing. You had this big en bloc fever, enforced block sale, where the property developers come along and buy up the whole property, demolish it and rebuild, higher density in many cases. And so you had this kind of fever taking place, and like $13 billion worth of transactions took place in a very short space of time. And so what the consequence of that was, I was renting in those days, and I had to move out pretty fast because the place had gone en bloc. And the first thing I did was a fairly recently arrived foreigner in Singapore, I'd been in the country for about less than 2 years at that stage, was to go online. Because previously, living in Europe, everything was online. Grocery shopping and travel, everything was online. And to my surprise, there's nothing there. And that kind of then prompted me to then go away and think a little bit about this and research this opportunity. And as part of that process, not only did I realise there's a big opportunity, both in terms of obviously real estate and Southeast Asia and population growth and middle class growth, but also this business model existed in a number of markets around the world, in around 10, 12 markets, France, Germany, China, Japan, Australia. It seemed to be a successful business model, so very, very profitable, very cash generative, 50 to 70% profitable kind of businesses in all these countries. So it looked like the business model kind of worked. Not only did it work, it seemed to work across multiple locations and geographies. It wasn't constrained to one location. So researched it and looked like an interesting idea. I put together a very mini business plan, which I then pitched to one of the investors in the previous company I was running. And he then introduced me to my co-founder, and then my co-founder was dating a real estate agent, and he was a techie, is a techie, Yanni, and it was a bit of a leap of faith because neither of us knew each other at that point. I'd had some pretty horrible experiences working with Finnish people before, and I'd vowed never to work with Finnish people again, but we worked initially part-time on the idea because he was working in India 5 days a week, flying back to Singapore on the weekends, and I was on my other business. And so we started part-time, and then at the end of 2007 we went full-time, and it was real full-time. It was 5 or 6 years of 7 days a week, 12, 14-hour days, and a mini prison sentence.
Quite the 007.
Yeah.
12 a.m. to 12 a.m. 7 days a week.
It was like that.
Yeah. So from the creation of the company to you moving over to become a venture capitalist, what are the most interesting milestones that PropertyGuru has achieved? I think it's pretty interesting because you have that process of first building the product and then bringing it to the market. And of course, there is mass market adoption. In fact, when I was searching for my property in 2011, I was using PropertyGuru to check numbers. So tell me about that process. Probably we've gone through 3 or 4 key phases of the building the business. So the first stage was really around, just proving the concept. So we knew this kind of business model worked in other markets. Was it actually going to work here or not? Because in those days, all the behavior was in the newspapers, right? So all the agents were advertising newspapers, all the property developers were advertising newspapers, all the consumers were sitting around looking at newspapers. At the same time, you had this big influx of predominantly foreigners coming into the country who perhaps had been used to doing stuff online. So initially it was
would this concept work, that people would go online, look for property, and actually then start making inquiries and make decisions online? And so we had to kind of cobble things together really in a very sort of bootstrap kind of way. And we did that, and by the end of the first full year of operations, we not only managed to kind of start to prove the concept, but also show that we can generate leads, which generates in transactions, which generates in commissions to the property agents. The consumers were finding property and actually transacting property. And also we were able to generate revenue, so we had about $300,000 revenue in our first full year. And so we went out on day one with a business model that was, we're going to charge for this. And so we demonstrated that there's been proof of concept, you can create some value for the consumer and help them make decisions, and also for the advertisers and agents in those days, and then also build some revenue around that. So prove the concept and then build a successful, solid Singapore organization. So we built Singapore into a cash flow positive 2009, profitable 2010, and it's been profitable ever since then, business. And so it wasn't until, we managed to build that solid base when we had competition there, quite a lot of competition, but to get the business into a position where it was, a very clear market leader with about 75% of all the people doing stuff online were using PropertyGuru, and that hasn't really changed in the last sort of 7 or 8 years. It's kind of really stayed there. And, sort of carried on obviously investing in the Singapore business, whilst then making a decision in 2011 into 2012 to then expand internationally. So that's kind of the second stage. And that second stage was probably the hardest because, we'd kind of built reasonably successful business in Singapore, and we felt now we just cut and paste. Roll out Malaysia, Indonesia, Thailand. We went 1 market to 4 markets in 4 months. And the consequence of that was a number of issues associated with that. So one was around, just all the growing pains. We hired 200 people for the international operations. We lost 200 people. We had to hire 200 people again. Huge churn. We made some mistakes in terms of the country managers we hired. We had, one was effectively stealing money from the organisation, passing it to his wife. We had one which was actually working for us and also another organisation at the same time in Indonesia. We had an alcoholic in Thailand. When you're relatively small and you have a limited resource, you have to be a little bit creative about and maybe sometimes compromising on talent. We had some issues in terms of, at that stage the whole organisation was focused on Singapore sales, marketing, customer services, finance, HR. And this Singapore organisation, we then said, by the way, we now need you to build websites in Malaysia, Indonesia and Thailand, mobile apps on iPhone for consumers and also for agents, Android for consumers and also agents, multiple languages in Thailand, in Indonesia, etc. So all at the same time as keeping the Singapore business really going well and growing, it's growing at 2 or 3x every year. Whilst doing that, continued to build us other stuff. So we stretched the organisation to breaking point over about 2 years. And so, people were trying to hire, train, launch new websites, launch the business, come up with a marketing plan. And the people doing that was this Singapore organisation. So when you do that, a few things happen. One is people get very stretched. 2, the business in Singapore then starts to suffer. And the innovation that was taking place, which was driving a lot of this, the morale and success, get some feedback change. Suddenly, the product and tech organisation was the bottleneck. Previously it was leading the organisation, because then they were fixing bugs in Thailand, fixing bugs in Malaysia, and so the whole innovation machine ground to a halt, which then had a follow-on impact on morale. So we went through a period of about 2 years where it was extremely challenging. I was effectively living in Malaysia, my partner Yanni was basically living in Thailand, and so between the two of us, we were away from the core Singapore business, and the Singapore team were also then stretched. And then learning lessons around product market fit. We took the Singapore product and we rolled it out into the multiple markets, expecting it to work because it had been successful in Singapore, and of course property is very localized, right? So how people look, what they look for is very different in each market. So what we then realized we had to so if you look at something like Thailand, people look for neighborhoods, it's Sukhumvit, it's Siloam, it's Thong Lo, whereas in Singapore they maybe look at the condo directory, the condo name, they want Aspen Heights, they want to sale, they want whatever. And so we had to then rebuild and rethink about the product proposition in each of the markets as well, and customize it a little bit. And also go through some lessons around organizational structure. So we went from a very decentralized country manager, mini CEOs running their own shows in each of the markets to a more standardized, functional organizational structure where you start to get the best practice. So that, the marketing organization reported in effectively to the CMO, the finance organization reported into the CFO sitting in KL. So it wasn't so much where the people sat, it was more around the actual best practice. So you get the same best processes and systems being implemented across the organization, even if you are customizing the user experience for the product, the front end, the actual processes and systems start to get standardized. And when we did that really then had a really big impact. So rather than having a mini CEO in each market, effectively the country manager became sales head and a figurehead for the company in that country. And then, the sort of last 3 or 4 years has been very much around sort of having gone through that growing pains, internationalization, it's been more around sort of professionalizing. We started off with the finance organization. So when we had our investment from Deutsche Telekom, one of the things they said was, look, guys, doing a great job, you're growing fast, and we really like the innovation that's taking place, but we need to get some compliance, governance, and finance working because it was a mess, and it was a mess, right? Because we were just running, and we're not paying as much attention to that as we should have done. So professionalise the finance organisation, professionalise the marketing organisation, professionalise the sales organisation, HR, both in terms of hiring C-levels and leadership team, but also putting in place processes and systems that actually support all of that. And that's taken perhaps the last sort of 3 years or so. And a big thing that's consumed myself and my co-founder has been, how do we diversify the business? Because, 3 or 4 years ago, 95% of the business was Singapore. Even though we'd expanded, the other countries weren't really bringing in the revenue yet. We were still heavily reliant on Singapore agents in Singapore. So we wanted to set about diversifying. And so if you fast forward to where we are today, it's now 50% Singapore, 50% outside of Singapore. It's about 50% agents, about 50% property developers. We took the whole business back to profitability again, and brought in a couple of rounds of some really solid shareholders on board, including TPG, which is one of the largest private equity companies, KKR, one of the largest private equity companies. And they've all, and also Square Peg, and also MTech, which is an Indonesian media company, they've all contributed really, really highly to the business. And we have a great board and great shareholders, and the business is in a lot better shape now than it was, when we started the whole internationalization process.
So I think then you transition out, right?
Yes.
You were the CEO,
yes, yeah.
And then you transition out. And I think, okay, there are many different types of founder stories, and I think they all have reasons for doing it.
Yeah.
What was the rationale for you to step down as a CEO, and what is the thinking process in terms of putting your current CEO in charge?
Sure. Yeah, this was, for me, it was a very personal decision. So about 4 years ago, so whilst I've been building the business and living and breathing the business 7 days a week and put all my energy into this, my wife was putting all the energy into how do we actually have a family and how do we have kids, and went through a whole bunch of fertility treatment and IVF, etc. And finally we had twins in 2012. So in 2014 the kids were 2 and I hadn't seen them for 2 years, And we were celebrating their second birthday, and I kind of had a bit of a realization that I'm working 7 days a week and just completely consumed by the business, and I didn't want to get to when the kids were 10 or 12 and not want to spend time with their parents anymore and not see them grow up or be involved in their growing up process. And that for me was a bit of a wake-up call. So I said to my wife that by the time the kids are 5, I'll be out of the operations, and she sort of laughed and went, bullshit, it's never going to happen. So I took it as a personal challenge to make that happen. So I chatted to my co-founder, Yanni, and he also recently had a kid. He was kind of coming to the same conclusion. At the same time, we were starting to get trade sale offers. We're starting to get people coming to us saying that we want to buy the business. And at that stage, the whole of the organisation was funneling into Stephen Yanni. Stephen Yanni controlled and ran everything. And we were effectively the bottlenecks to the growth of the organisation at that point, to really, really scale. So we came to the conclusion that the only way in which we're going to, one, be able to at some point remove ourselves from the business. If the business did get acquired, then if it's totally reliant on Stephen, we're not going to be able to escape ever. But also for me, it was fundamentally spend more time with my kids and see them grow up. And that did not fit with what I was currently doing in terms of running the business and the way I was running it. So at that point, we then sat down with the board about 4 years ago and said, look, the role of any good leader is to build a succession plan. And we're doing that in the organisation, trying to think about doing that in the organisation, but not doing it for ourselves. And we think we should do it for ourselves. We managed to persuade them to buy into that, and we agreed to a plan with them which was around building executive leadership team, build a middle management, diversifying the company, so it's not so reliant just on Singapore. We're really trying to crack our properly developer strategy, and then finally find a CEO. And that took about 4 years. The whole process from end to end took about 4 years. I mean, finding the CEO was actually reasonably easy, surprisingly. I thought it was going to be one of the hardest things. What we realised was when we started to talk to people, we had a headhunter helping us, was that there were a few super talented people in the region who had very large roles running the whole of Asia Pac or running the whole of Southeast Asia, or large teams, typically working for big tech US companies, who were increasingly frustrated by the fact that every month had to be on a plane back to the base saying, look, here's Asia, I know it's only 10% of the revenues for the group, but come and invest more. Increasingly matrix management organisation, increasingly a bit of bureaucracy taking place. And the prospect of running a very small at that stage organisation, but having control of sales, marketing, product, tech, running the whole thing was actually quite appealing to some people. And so we had, surprisingly, some really, really talented individuals who put their names into the ring. And we went through a process, and we selected Harry, and Harry's demonstrated just done a fantastic job. And he made a reasonably easy, painless transition process, because he came in with his eyes wide open. We had our eyes wide open. We also had a coach to de-risk the whole process. So we had a coach who was coaching me, a coach who was coaching Yanni, and a coach Harry, and then all the three of us together, when we took all the horrible things we've been talking about to our coach, all put on the table at the same time. We had to work through some of the issues that we had. That really helped de-risk it. And so that kind of transition process took about 18 months or so. So initially, Harry coming aboard in a new role, effectively a CEO role for 9 months, and then handing over, and then 12 months handover process from that until I was completely out of the operations. And so that went really, really smoothly. As a result of I guess myself, Yanni, and also Harry being very mature about it. I personally found it extremely underestimated at how hard I would find it personally. Let it go, and a whole bunch of emotions around crisis of confidence, lack of purpose. I felt part of my social life had gone because suddenly I had to remove myself from the organisation, so give Harry the opportunity to make decisions and be the person that everyone went to rather than to Steve. And not get involved in decisions, and also I discovered I had an ego through that process. I actually missed the media interviews and all that kind of stuff. I didn't think I would, but I did. And so it was a really interesting process, and it had been 12, 18 months or so. It was pretty challenging for me personally.
I think it's a very big testament for you and Yanni to take such a big step. And just to help my audience, Harry was, I think, the regional managing director for LinkedIn for Asia Pacific.
Exactly.
Before that,
right.
That's not easy to hire out.
No. And it's also a big risk, for anyone like Harry coming into the organisation, because you come into an organisation which has been, run by two founders, and a lot of the team there is associated with the founders, and the founders hired them over the last 7 or 8 or 9 or 10 years in some cases, and come into that and trust the fact that founders will actually do as they say and actually give the space and let decisions be made, was also a testament to Harry. And Harry has done a fantastic job continuing, but also building, put his own personal mark on it, building his own team around him as well. And the business is in really, really solid shape now.
So you still stay in the board?
Yeah. I'm still on the board. I'm still involved a couple of days a week. My role has moved from being day-to-day operations, which I had the whole of the team reporting to me, to more strategic. So, looking at where we're trying to take the business in the next 2 or 3 years. There's still quite a lot of M&A activity, so a lot of the competitors that we were talking, that we were fighting with a few years ago, now, running out of money or maybe not succeeding, now want to be acquired, and that happens across all the markets we're in. So we get quite a lot of M&A opportunities that tend to come our way. And then also looking at adjacencies to the core business, how do we then leverage the brand, the reach that we have? There's 25 million monthly consumers using the service. There's 50,000 agents and property developers using the service. How do you leverage that and the brand into other things, which kind of makes sense. And so that's kind of kept me a little bit busy. As time has gone by, some of the hats that I've been wearing like those started to get filled. So, I guess in the short to medium term, I'll be able to hand all my hats over. I'll remain on the board though.
So you're a venture partner on Wavemaker now. Can you introduce Wavemaker, the venture capital firm in Southeast Asia, to my audience?
Sure. So Wavemaker is one of the leading venture capital companies in Southeast Asia. It's been around since about 2003. It's got dual headquartered in LA and also Singapore. In Southeast Asia and the Singapore portfolio now is around about 100 companies it's invested in over that period of time. It's on to the third fund. It's in fact just in the process of announcing the closings of parts of the third fund. It focuses uniquely on B2B and enterprise companies. So 80% of the portfolio is this very unsexy B2B companies, which, a lot of people want to go after the big, sexy consumer brands. But actually B2B is really, really interesting. And I really like that space because the companies, generally speaking, can generate revenue, cash flow, become profitable. You can see how that can happen. They might not become unicorns in the future, but to get to 100, 200, 300, 500 million dollar type businesses, building a base in Singapore, but maybe looking internationally, there's a great opportunity for that. And Wavemaker has been working with these companies now for the last sort of 10, 12 years or so, and has a great track record. So when I chose to think about what to do next, I was talking to a whole bunch of different people, and including venture capital companies, but I chose Wavemaker because of their unique focus on this underserved space and the ability for these companies, I think, to get cash flow positive and profitable quite quickly. But also the team itself, very founder friendly. I'd spoken to some of the companies that have been working with Wavemaker for 2 or 3 or 4 years and who had gone through tough times. And I do believe that many other VCs would have probably ditched or written off or tried to dispose of some of these companies. Wavemaker kind of stuck with them and helped them pivot and change and grow and actually succeed in the end. And I really, really like that. The founding partners, Paul Santos and Eric Nulas, are entrepreneurs. They've built and sold and created businesses of their own right and now doing venture capital. So they bring this entrepreneurial mindset to the table. A strong, founder-friendly, non-judgmental, collaborative kind of value system, which for me was really important. If I'm going to work with people, it's got to be people I like working with and have respect for. And so the value part was really, really important.
So what's your current role in coverage for Wavemaker?
My current role is so venture partner. What the hell does a venture partner mean? I still don't really know. But what do I do as a venture partner? So I'm doing deal sourcing. I get probably about 4 or 5 investment opportunities a week coming to me. So that goes into Wavemaker. And I get involved in qualification of those deals and also other deals as well, working with the investment team. And that's typically, working with the founders, understanding the business opportunity. It's also mentoring some of the more mature startups in the portfolio. They're typically the ones that are Series A to B. They're generally looking at, okay, I've proven the business in one market. How do I think about scaling? How do I build my leadership team? How do I build my sales organization? How do I really capture value? So I might be creating some value. I've got a solution and I'm charging $10 a month per user, but actually the value I'm creating is $100,000 per user. Maybe I could charge $1,000, and that value creation and capture piece, so the pricing and packaging and monetization piece is something I help a lot with. And also then around next stage of funding, a lot of stuff I've been doing has been around funding on both sides and sort of 20 deals on both sides, either as investing in companies myself or raising money for PropertyGuru, or with Wavemaker putting money into companies. And so helping that Series A to B kind of pitch and fundraising process is another area that I help with. And I'm also very fortunate every now and again I get to see some fantastic founders and businesses that get to put my own money into it as well. So I'll occasionally co-invest on some of those deals as well. So I continue the angel investing both on my own but also with Wavemaker. So yeah, it's a varied role. It's really, really exciting. And what's really reassuring for me is the quality of the businesses I see and the founders I see is quite impressive. If I compare to what the startup scene looked like 6 or 7 years ago, it was fairly immature, and the companies I saw were relatively immature. What I see now is like a night and day difference. You've got some really talented and experienced, in many cases, entrepreneurs who've perhaps done it once or twice. They've maybe got a corporate background and now doing their startup, or they are, Stanford University professor happens to be wanting to build a business in Singapore with their area of expertise. And so the quality of the people I see is pretty impressive.
So this is my favorite question to everyone in the VC business. What's your typical day like?
There isn't a typical day. I mean, it's a combination of what I mentioned just now. I mean, it's fielding inquiries and referrals from friends or friends of friends for startups who are looking for funding. It's getting involved in calls or meetings around deals. So there's a lot of deal focus and mentoring. There's also a little bit around Wavemaker Fund itself. So looking at talent, hiring new talent, looking at how does Wavemaker position and market itself. So a little bit around that as well. Not so much, but some of that as well. So I'm working with Wavemaker, 1 day a week. In reality, it's probably most times 2 days a week, but that 2 days a week gets spread over the week. So generally speaking, Thursdays you can find me in the Wavemaker office or around the Wavemaker office, and outside that I'll be out and about.
So I'm very curious to ask you this. So what are the type of attributes you look in founders from startups? You mentioned that between now and the past, the founders are becoming more professional. They know what they're getting into when they talk to a VC. They know how to pitch. What are the things that you look into them that is important to you, and this like, I'm going to invest in this person or this company or this group of founders? Yeah.
Well, it's the first thing I'd say. It is very much driven by the founders, because at early stage you don't necessarily have 5 years or 10 years track record to be able to say, actually, look, these guys have really proven this business around the world, and it's now going from a $50 million to $100 million business, right? So the founders are a critical part of this. And so the founders typically that look for, generally speaking, have a little bit of experience. So if I think about the average, by the way, the average age of the founders in the Wavemaker portfolio has gone from 30s to now 40s. Generally saying, actually, the more successful founders in the Wavemaker portfolio have been slightly older. And that basically would say, okay, they've perhaps had 1 or 2 startups before, or they've had some kind of corporate experience before, generally speaking. Not all cases, but generally speaking. The second thing is, are the founders able to build a team? Can they demonstrate? Because at a certain point, the founders end up being the bottleneck, as I said for myself. Then can the founders then start to build the executive team and retain that executive team? And we see time and time again with companies that they're hiring, losing, because they're still controlling everything, right, too tightly. So founders who can build teams, founders who are passionate and are thinking through things differently, but can articulate what they're trying to do to address a real pain. So quite often, believe it or not, when I meet startups, they're not able to even address the pain they're addressing. So if I think about PropertyGuru, the pain we were addressing was like this big property market, and it was highly intransparent. You're going to spend $1 million on your first property in Singapore, maybe, without any information. It's completely out of control. It's a really, really big pain. It's like a $250 billion pain that we're trying to fix. So is there a real pain that the founders are trying to address? And is their solution something which is either unique or defendable, they can build a competitive moat around? So strong founders, strong founding team, usually with a little bit of experience, but not necessarily, very clear in terms of what they're trying to do and very driven by where they're trying to get to and able to articulate that. So and you can normally tell if you ask the founder 5, 6, 7, 8 questions, the clarity of the thought process in terms of being able to address those typically will give you some clues. Then is it a big pain that they're trying to address, and does their solution really uniquely or can be defended address that problem? And then lastly, how big can this get? Because quite often, yes, there's a pain, yes, the solution addresses that pain, and it can become from $1 million to $5 million solution. The total addressable market might be $50 million. You kind of think, well, maybe not, but if the total addressable market is $1 billion, $2 billion, $5 billion, and actually they can capture 10-20% of that, it becomes more interesting.
So can you tell me then what are the verticals that you're looking into? I understand Wavemaker does very B2B type business, very enterprise
Yeah.
driven type business. Where are the verticals that you're really focusing on now?
Well, that's a challenge because Wavemaker is focused around B2B, early stage B2B businesses, and therefore by virtue of that, it's sector agnostic. So it doesn't focus on one particular area. However, if you look at where the successful companies that we've invested in or we're looking at now and actually currently on the table, we see a lot in healthcare, life sciences, because there's some great opportunities there. We see a whole ton of companies which are purporting to be AI machine learning companies, but in reality are not, so you have to try and wheedle through that. But good application of AI and ML. For example, financial services, we've seen some really interesting companies there. So using machine learning at scale and using technology at scale to be able to address some of these issues in financial services. And there's a great company in the portfolio called Silent8, which is doing eKYC for banks. Got some great traction in that space. Education, agri-tech has been another area, so really quite unsexy, right? Really boring. But if you can help a farmer increase yield, an individual farmer who's living not almost hand to mouth, you can increase their income twofold, then it has a massive impact not just on that farmer but the farming community, the village and the broader community. So there's a company called eFishery that Wavemaker invested in, which basically doubles the yield of fish farmers in Indonesia, and it has a massive impact.
Currently there's a wave of companies going into what is called the proptech space.
Yeah.
And you have been an operator in the proptech space.
Yeah.
I would say that PropertyGuru is probably one of the first companies that
Yeah, probably. Yeah.
Before
Before the word was invented.
before we work and before all these companies have popped up. What are the key opportunities there for startups to solve?
Yeah, so think about proptech. So proptech's become another one of those buzzwords, and it's a big opportunity because obviously property, largest single asset class in the world. It's sort of $500 trillion worth of assets in the property market. It's archaic. The property industry has not fundamentally changed in hundreds of years, and this is one of the challenges about proptech actually, because you've got very entrenched bricks and mortar traditional businesses doing things in a very traditional bricks and mortars kind of way, and hasn't changed for hundreds of years. So whilst the opportunity is huge, it's trillions and trillions of dollars, technology is an enabler to support use of technology in the real estate industry. There are a lot of barriers to it, so it's still quite challenging. But where the opportunities lie, if you think about the real estate value chain, you've got everything from, how do you value land, research the land, to be able to buy, to finance the purchase of that land, to then assess what you should build on that land, to then the design to construction, digitizing all of that, construction, how do you digitize that, the whole sales and marketing, how do you digitize that, and that's a big area that PropertyGuru play in, and then also how do you then, once you've got the asset, how do you maximize the asset, whether it's leasing it out or selling that asset. Now, PropTech can play a role in that whole value chain. Now, I personally get more excited by the B2B opportunities here, because the B2C side is essentially that sales and marketing machine, and that's kind of been, I believe, by and large, been done already. There are some new variations of digital agencies starting to take place, but by and large, I think that's done. The bits that haven't been is how does a property developer really digitize? How do they finance? How do they get access to financing? Can you create more liquidity? So, for example, one of the areas where I think is really interesting is as you start we're just on day one of blockchain and the impact that's going to have on all industries. But if you look at the real estate industry, one of the things it can do is enable fractional ownership in a very secure way. So you can take a building or a fund, split it up into small pieces, and allow people to be able to invest. So one of the challenges with real estate is accessibility. So how do I get on that property ladder? I need $1 million or $500,000 or $100,000. It's a lot of money, right? Firstly, access and affordability on real estate. Secondly, liquidity. So if you can address those two with real estate, you're onto a winner. Now, I believe blockchain can help some of that in terms of fractional. So if you can go to a property and say, right, we're going to take 20% of this property and we're going to effectively tokenize that and allow people to buy essentially tokens in a property or a fund. And then on top of that, how do you then create liquidity on an exchange, which is a digital security exchange? Then that's a huge opportunity, right? And then we're just effectively on day one in that space. And so That's one example of like that whole liquidity pool that can take place. Yeah, so I think there's lots of opportunities, and I see probably 1 or 2 a week in the proptech space and the broader sort of smart city space around proptech.
Just one final question. Given your experience and what you have seen, how would you advise a startup founder today if they want to expand into Southeast Asia? There's a difference between starting in Singapore and expanding into Indonesia. There's also a difference between when you start from Thailand and you want to go into Singapore and Indonesia.
Right. Well, first of all, I think it depends on the business model. Is it B2C or B2B? If it's B2C, then typically I believe the user experience will need to be very fundamentally different, and you'll need to then effectively build the business in each of the markets separately. So therefore, don't run before you can walk. Build a solid base, and then use that base to go to the next market, and use that base to go to the next market, rather than go 10 pins on a map and say, look, I'm now across the whole of Asia, but actually the depth is not there. If it's a B2B business, I think the ability to scale across multiple markets is a lot easier other than language. That's 2 things to think about. I think speed of expansion is going to, base on the business model. If the business model is replicable easily, the barriers to entry are low, you may want to think about expanding faster rather than slower. But going back to the point I made right at the very start, don't also think you have to run super fast, because things do take longer than you think they might do. Every single market in Southeast Asia is very, very different in terms of building your business internally, so the culture, the hiring, and how that team's going to run, versus also external in terms of how people might use your product or service. So, it's highly, highly complex. Now, I think about expansion from one market to, then the complexity goes up level of 2, go to another market, it's another level of 2, and you just keep, the business starts to get more and more complex. So only do it when you're ready, only do it when you've built and thought about building the regional team. Otherwise, you're going to stretch your organisation to breaking point, as we learned.
Steve, many thanks for coming on the show and sharing the story of PropertyGuru and what you're currently doing. And I'm sure there will be some more times that we're going to have this conversation again. So in closing, I want to ask 2 questions. First question, can you recommend book, movie, podcast, anything that has just recently impacted your personal or work life?
In terms of things I've consumed, I guess a whole ton of movies, but I guess that one of the things that's had the biggest impact on me was Blue Planet 2, which was David Attenborough documentary around our planet and particularly the oceans, and just the whole impact that we're having on our environment and climate change. And that was it left a big impact on me in terms of damage that these horrible humans are causing on the planet, and and the sheer scale that we're doing it at. That was kind of scary. Purely from a fun point of view, a movie I watched recently, which I really quite enjoyed, was Vice, about the Dick Cheney years, and I highly recommend that one. And then I think from a business building point of view, the books that have had a big impact on me has been 4. Delivering Happiness, Tony Tsai, It All Begins With Why, Simon Sinek, Mastering the Rockefeller Habits in terms of building an SME from scratch, and a very dry, boring book, but actually quite good in terms of leadership skills, level 5 leadership skills, Good to Great.
You can definitely Google me at Bernard Leong, and you can find us on iTunes, Stitcher, SoundCloud, Acast, Luminary, Himalaya, and Spotify. You can definitely tweet to me your comments, and of course, most likely email to me. And please keep a note that we have a live show on the 5th of September in Singapore, WeWork, Suntec City. Tickets will be on sale, and I will let you know when that is. Once again, Steve, many thanks for coming on the show.
Thanks, brother.